The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the July 17th, terrific Thursday edition of today's opening bell on the Trader's Edge. Thanks so much for joining me, folks. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful Wednesday. Let's make sure we do all that we can do to have a terrific Thursday. And to all of you new listeners to TFNN, welcome to the Hotel California. You know how it goes. Once you check in, you never check out. That means you've got 9 hours today, 9 hours of live programming, all kinds of wonderful technical analysts that will help you to take a look at your stock chart, take a look at the indexes, the markets, anything that you might trade, help you identify where support resistance is, where price may be going. This is a call-in talk show. That means you've got the opportunity to give us a call. We'll take a look at your whatever it is that you're trading and assist you as best as we can. Our call number is 877-927-6648. For the next couple hours, we'll take a look at technical patterns that I love to trade, the Rhodes Momentum trading strategy, the divergence indicators. We'll take a look at A to B equals CD patterns, Fibonacci expansions, and retracements. Of course, that means we'll look at Gartley buy and sell patterns. And, of course, we always look at Japanese candlesticks because those are the signs that the bulls and the bears make for you and I each and every trading session. We'll use those tactics, but most importantly, folks, we want to make sure that we've got a strategy. That's what I call Mastering Probability. That is my daily newsletter service. You can get access to it by going to the homepage at TFNN.com. Down towards the middle, you'll see all of the contributors. Just click on my name, Steve Rhodes, and click on Mastering Probability. That'll take you to the sign-up page. You can access that for 30 days. Unconditional money-back guarantee. It is terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures trading off about 31 points, trading out at 17,025. S&P Futures down a little over 7. They're trading at 1967 and a quarter. NASDAQ Futures off 11 points, trading at 39.11. Russell 2000 down 6.5 points at 11.40. Goldilocks up $5. She's trading at $13.04. Silver's up 8 pennies, trading out at $20.86. Dollar index, U.S. dollar index back 6 pennies, trading out at $80.56. A quick peek across the globe out here. Let's see what we've got over in Germany. They had a party yesterday. However, they're giving their party pooper, I believe, is the way that we'll look at it. We'll go take a look at its stock charter. If I don't, just remind me. Just simply, slap me upside the face. I'll be happy to take a look at that. Right now, it's trading off 80 points. That's down about 0.8%. FTSE off about 0.6%. It's down about 39 points. In Asia last night, a sea of red, although really slightly. That is to say, the biggest move was down in the Shanghai. It was off 12 points. It closed out its session at 21.52. The Hang Seng unchanged, down 2 points. The Nikkei as well, unchanged. That was off 9 points. Again, our call number is 877-927-6648. Let's begin by taking a look at our charts. Let's go identify some market profile support and resistance levels out here. Let's take a look at the 4 futures contracts for the indices out here. As we take a look at those, we'll start off with the daily chart of the, I wanted to do it. Let me get a moment here and make sure I've got the symbol up there. There we go. Let's start off with the daily chart. What am I looking at here? Oh, that's interesting. Well, let's go look at the daily chart for the ES Mini. Then we'll go take a look at each one side by side. If we take a look at what happened so far this morning, we'll go ahead and put this together for you. Let me just blow this up on my screen. If you're listening on the radio or your mobile device at TFNN.mobi, thanks so much for doing that. Of course, you can catch the archive of this show. That means you'll be able to see the video portion of this by going to the homepage at TFNN.com. You can click on TigerTV. Of course, you can watch this live right now just by going to the homepage at TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on it. Click on that. The show will stream live to you. You'll be taking a look at the S&P Futures daily contract. Now, as price was moving down this morning, the market profile low is 1961.50. The actual low that we have seen here this morning, 1961.50. Now, we know for the past several days, that means going back to July 14th, prices tried to bust it to the upside. That means try to clear the resistance area that was at 1974. We saw yesterday an actual close of 1974.75. You know how I am about just busting something with just a smidgen. I don't like it at all. You want to bust something with conviction, and that did not take place yesterday. That's what was going on the daily chart. So the key levels to be watching today, pretty simple. And we've been trading in this trading range here for the last 4 trading sessions, 1974 to the upside, and I don't mean 1974.75 as a close, and 1961.50 to the downside, and I don't mean if it closes at 1961, you get your skirt in a tizzy out here. And what does that really mean? Look, if you get a close above 1974 with some conviction, then you've got a market that wants to continue higher. If you get a close below 1961, it says make sure if you're long, you tighten up your stops. That's if you're using a daily time frame for your trading out here, and then expect a potential change in trend to take place. If we take a look at what went on the intraday chart here, we'll look at the 30-minute. I mentioned Gartley patterns. We'll take a look at the Gartley pattern inside of the ES Mini on a 30-minute chart out here. Price came down. It got where? To that 1961.50. What was it doing as it got down there? Made a 0.786 Gartley buy pattern. Now, we haven't seen a reversal signal, so to speak. There's no real reversal set of candles out here unless we stitch them all together. Nonetheless, and price was also what? On a 30-minute basis, it was where? It was in the extreme oversold condition. So what does that mean? That says in order to work that condition off, you move sideways or you move higher. Let's go take a look where price is moving now. And this is going to be key. We're going to go from the swing point high. This came in at 10 o'clock yesterday morning. That was up at 1978. We'll come all the way down to the low that was put in here during the 7:30 a.m. session. We'll see so far all we've seen is a dead cat bounce. 1968 is your 0.382 retracement. If the ES Mini gets above that, and a normal retracement, by the way, would take you up to the 1972 level, that would be your 0.618 retracement area. If you were inclined to be able to sell this, wanted to sell this market, that is probably the level that you would be focused on. So at this stage here, you've got a nice little Gartley buy pattern that has worked out. That's come to fruition, coming from an oversold condition, and that's what's going on the 30-minute chart. Let's go take a look. We're using all types of tools out here. Of course, I utilize 3 wonderful trading tools for being able to take a look at charts. I'm using the Ensign Windows. That's what was up last. We started off with the eSignal platform, all, of course, being fed by eSignal. Then I use Ninja Trader out here. If we take a look at, that's the gold contract on the 120-minute time frame. Let's switch over and actually take a look at the ES Mini. See what it has done. Now, it made a bottom back here. Let me get my crosshair going. It made a bottom back here in the trading session at about 10 o'clock in the morning. That was on July the 10th. Made a nice little price relative strength divergent pattern out there. As was doing that, it gave you a nice confirm. Now, here's a morning star candle, this big wide-ranging bar as it came off of the lows out there. You got a nice big bullish engulfing candle. And at this stage here, the move to the upside, as that relative strength indicator gets up towards that 70 level, the extent of this move to a certain extent, then now you have to start utilizing other trading tools in order to be able to manage your trade out here. Now, on the 120-minute time frame, as we blow this up, you can see right now you've got a bullish engulfing that is trying to form out here. This trading session here is going to end in about 44 minutes, so we've got a while to go. If we do see a close above the 8 a.m. bar, that means that high is 1967.75. That would actually be bullish, potentially bullish out here. But, of course, what we've seen is we've seen a consolidation zone. We have seen a sideways trading range over the course of the last many days out here. In fact, let's just do this. A little bit easier for me to draw those consolidation patterns in. So let's go take a look at that. And, of course, what we know about consolidation patterns is that once you break a consolidation, your move is equal to or greater than the consolidation. So let's go put up a 120-minute time frame. In fact, let's just do this. ESU4, and let's change this over to the 120-minute time frame. Let's go see if we can find a consolidating pattern here that makes sense. Let's clear the deck. Let's clear the charts out here. So we can see the consolidation high, right? Let's just go ahead and draw a box out here. So here's our consolidation high. And for the consolidation low, do we want to come all the way back here? Yeah, let's do that. Let's come all the way back to the low. Let me pull this back just a little bit further to the right, and then we'll figure out what that consolidation. So say it's been consolidating in essence since about the time frame of about 5:15. 5:15. What a great song from the Who out there. I guess I got to move this up just a tad up here. the upside. So if we take a look at this consolidation pattern, the low that we're using for the consolidation, that comes in at 10 o'clock in the morning. That's on July 10th. That's at the 1945 level. That's the bottom of the consolidation. The top of the consolidation is 1970, we'll call it 1978. I'm going to use 1980 and 1940. So we've got a 40-point or so consolidation out there. That says if you break the 1978 level, you can go ahead and add 40 points to it. That would take you to about what? 40 points, 88, 98, 08, 218, 2018 would be the projected. So 2020. Let's just use our vision out there. That would be a move to 2020. Likewise, you break to the bottom. Now you've got a 40-point move to the downside. That takes you into the 1940 range out here. Well, there's nothing to look at on the upside because we're at all-time highs. Let's see, where does 1940 take us down to? 1940 becomes quite a retracement, it looks like to me. 1940 gets us back to, where does 1940 get us back to? 1947. Is it the low of the swing points out here? Low is 1936. Yeah, actually gets pretty logical. That would just did I do that right? No, I don't think I did that right. 1940. That would be 1900. Thank you very much. So 40-point move to the downside. So where does 1900 get us back to? Gets us back to, looks like, to this. Let's take a look at retracements out here. Saw a fairly decent change in trend. That was back here where this is back in the April time frame, right? Well, let's come to the April 15th. We know that that's an area that we want to kind of focus on and pay attention to. So let's take a look at the retracement back from the April 15th-ish range out here. See where 1900 shows up on our charts. Dead cat bounce, 0.382 is 1911. 877-927-6648. You can give us a call, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Futures-wise, let's see what we have out here. We've got the Dow futures. They're trading off about 28 points. S&P down 7. NASDAQ off 10. Let's go back. Let's take a look at our market profiles for the other three indices out here. Let's take a look at the NASDAQ futures. So we've got the S&P. We know that that's trading with inside a 40-point consolidation range out there. Really, you could almost say, yeah, we're going to call it a 40-point consolidation range. We know the levels we're looking at, 1974, and 1961. If we take a look at the NASDAQ futures as well, they've been trading in a little bit of a consolidation as well. They've been attempting to take out their resistance, their market profile high. That's at 39.18. We've seen a slight close above that. Yesterday's close, as an example, 39.22, but it has not been able to really bust it up. Where the support area here so far inside of the NQ is what's referred to as its point of control. It's real congestion area right around the 38.92 level. The one we want to be watching to the downside, we know what we're looking at from the upside. To the downside is 38.66. You see it close below that? It's a suggestion that a change in trend is taking place. I would say you really need to see it close below the July 10th low, and that's priced out at 38.31 in order for that to truly come to fruition. If we take a look at the Dow futures, the Dow has really been the strongest. You see the Dow is actually broken out of its market profile range out here, that being 16,889. However, we're going to go take a look at the Dow. We're going to see a little pattern out here that is one of those potentially cautionary signs. Now, we won't see. We'll give you the parameters on that. But right now, what we know is the Dow here is bullish, long and strong out there. If we take a look at possible price projections, look, just a small A to B equals CD to the upside here, just coming off of the recent, we'd have to use, let's use this as a swing point low, June 26th as your A point, your B point out here on July the 4th, July the 3rd, really. And then you've got your C point, July 10th. Hey, it's made the 1-to-1 A to B equals CD to the upside. So that completed at 17,057. You're trading at 17,031 right now. Let's go take a look at the Russell 2000. And then we'll go take a look at the actual index, the Dow index, and we'll show you, because that's the strong one when we take a look at profiles out here. So we'll go take a look at what its message may, in fact, be. As we take a look at the Russell 2000 on its daily chart, it continues to show its change in trend, trading out at about the 1141-ish range. 1153.32 is its market profile low out there. Getting above that, closing above that, would be somewhat bullish to neutral out there. But since it's the Russell that is the weakest, we want to be paying attention to the weak indice, because when it gives a bullish mood, the other indices ought to be moving higher, and they'll just simply go ahead and carry the Russell along with it. Otherwise, right now, closing below the market profile low, which it has continued to do here for quite some time, really ever since the trading session of July the 8th out there. That says we could be looking at retracements or a move all the way back, 100% move of a move, and get all the way back to its large consolidation, which I suspect is really what's going on inside the Russell. Now, this is a daily consolidation pattern out here. We'll go ahead and use some lines and put those across the screen, the horizontal lines out here. Consolidation highs, they're up here at the 1203 area. The consolidation low, that's all the way back here at, we'll use the February 5th area, and that's at about 1069. So a very large consolidation. You got 1069 to 1203. Somebody do the math on that for me. 1100 would be, it's over a 100-point move, 130-point move or so. So breakout above the highs, 1203 at 130-point move. That gets you up to 1333. Well, folks, at 1350, that would be that would complete the measured move of the monthly breakout inside of the Russell 2000. But at this stage, it looks like the Russell wants to head lower, get back into that 1069-ish to maybe 1074 range out there before it takes another attempt and pole vaults the highs out there. Now, I did mention, let me go ahead and put this chart up on the screen. Something for us to be focused. So we know what to look for in the weak area. Let's go over and take a look at what we might want to be looking at inside of the strong area. Let's take a look at the Dow, because if we put this chart here of the Dow, this has got the Donald Bradley model out here. That's the blue squiggly line going across my screen. In fact, maybe I can just make that line a little bit darker. I think it's okay. You can see it on TigerTV. Let me blow this up on the screen just a bit. Now, Donald Bradley, he published a book back in 1946, I think it was. And the science behind that book, I think it was called Stock Market Prediction. And the science behind that book was all based upon planetary alignment, such as Venus and Uranus and a number of different planets out there. But it's a model because you're taking a look at planetary alignments. It's a model that can be forecast for thousands of years. It can be unlimited. Well, here's what the Dow, in essence, did yesterday. It made a nice three drive to a top pattern. Now, a nice wide-ranging bar to the upside. Usually markets don't end on those. So today, here's the deal. If the Dow closes below yesterday's low, 17,061.91, the Donald Bradley model, which is basically yesterday was the day for it, might come to fruition. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow trading down 44 points, trading out at 17,043. S&P off 6 at 1975. The Nasdaq Composite off 11 points at 44.14. Russell 2000 off 5 points at 11.46. NDX 100 off 6. New York Stock Exchange down 48 points right now. Gold up $5 and change. Silver up 8 pennies out there. Had a request in our Tiger's Den, folks. If you are looking to take your game to the next level, make sure that whatever it is you're doing, make sure that, if it's in sports, you're playing tennis or you're playing golf, go play with somebody that is better than you and observe what it is that they do. It's always about the peer groups that we hang around with that can assist us so much. And when it comes to trading and investing, TFNN has got the Tiger's Den. We've got a great group of traders in there offering ideas all day long. If you've never had a chance, an opportunity to join us in our Tiger's Den, please do so. Go over to the homepage of TFNN.com, and what you can do is you can test drive it for the next 30 days. Had a request in the Tiger's Den to provide you with a list of the top 20 holdings inside the NDX 100. So let's go do that. Take a look at that here right now. Now, I'll give you the top 20 holdings here inside the NDX. It's going to start off with none other than Apple. We'll go take a look at these stock charts. We'll actually go ahead and do that. Let's do this. Might as well do this one at a time out here. If we take a look at Apple, it's up 19 cents. It represents 13% of the NDX 100. Now, let me give you the top 5 as an example. Apple is 13%. Microsoft, this is as of yesterday, by the way. Microsoft is 8%, a little over 8%. Google's a little over 4%. Intel's about 4%. Facebook is about 4% out there. So let's go take a look at them. Let's take a look at Apple first. Let's go see what patterns we have going on inside of the market out here as we take a look at the Apple chart. Apple has been trying to get above the B point out here with some volume. The B point of an A to B equals CD to the upside. That B point is a trading session from June the 10th, has volume of 62 million shares as it got up and over it. Did it with 56 million and 65 million on the trading session of July 8th. At this stage, unless Apple closes below its market profile low, which would mean 92.58, then the presumption is that Apple wants to go ahead and complete its 1-to-1 A to B equals CD to the upside. That would take you up to 101.80. where it would complete that pattern. I would make the case that if volume is accelerating on the way up, Apple will do more than get to the 101.80, more likely around the 105.10-ish level. So at this stage, Apple's still in bullish mode out here, above 94.39, its market profile high. If it cracks that level, look for 93.78 and 92.58 to be the areas that you would want to focus on. A close below 92.58, and maybe it's a little bit too early for Apple. It can still do the A to B equals CD, but that would say it wants to go test the swing point from June 25th out there. So that is on the numero uno equity with inside the NDX 100. Let's go take a look at Microsoft. I believe they said they're going to lay off a number of people out here today, and looks like it's a celebration. We take a look at the equity. It has gapped up this morning, right now trading at 45.43. Let's go pull this back on its stock chart and figure out what it's doing. Let's actually take a look at a weekly chart. Let me switch over to the weekly time frame for Microsoft. And if we take a look at it, let's look at the larger A to B equals CD pattern that is out here. Microsoft has been on a tear out here. The A to B equals CD pattern coming off of the lows back in 2012. December 3rd, 2012 is what I would use as my A point. My B point is going to be we'll use this nice high wide-ranging bar on July 15, 2013. It pulls back, makes a little bit of a low back on September of 2013 as well. September 2nd. This is a weekly chart that we're looking at. Right now we can see that on the weekly basis, coming through the 1 to 1.272 with a wide-ranging bar. What does that say? Well, it says to me that what Microsoft wants to do is get up to the 47.40 level. And that's where it is headed right now. It's trading at 45.39. What do we need to be watching, though, for on Microsoft? Well, now it's in a kind of a dangerous zone out here with this gap up. It's a dangerous zone if you were to see a gap down tomorrow. What Microsoft would be doing is leaving a island reversal, fairly significant island reversal as well. Let me put this on a monthly chart. And that's the number 2 weighting with inside the NDX 100. Is that at all-time highs? No, it's not at all-time highs. Gets us back into the 2000 time frame. The 2000 time frame swing point is, in essence, right now what it's trying to trade into. That is the trading session from December. It's not 2000. It's December of 1999. The low of that swing point. It's a monthly chart that we're looking at here. The low of that swing point is 45.44. You're at 45.46 as we speak right now. Let's go take a look at the number 3 weighting structure with inside. That's Google out here. Unfortunately, with the stock split, I don't have enough data out here on this stock chart. Well, certainly not on the monthly basis. Let me see what the daily gives us out here. We might have some market profile highs, so that would be helpful to us. You've got Google not being able to take out its resistance area. That's at the looks like about 584. 31. What are you trading at right now? No, I can't get to it. Looks like we'll just call it about 585 out there. Yes, and this morning here, gapping down just slightly, ever so slightly. Should find some support. Google should find support at about the 573 level. That's number 3 inside of the NDX 100. Let's go take a look at number 4 out here. That's Intel. INTC is the ticker symbol. Now, that had gapped up yesterday. In essence, it's off about, 44 cents as we speak right now. It's not really a gap down. It's a move down, most certainly. It's a little bit of a gap, if you will, from yesterday's close. What we need to watch for inside of Intel is not today's action per se, but certainly tomorrow's action. If the market were to start turning a little bit bearish out here. What you want to remember on Microsoft, we took a look at its gap up, so it has the potential to form an island. Only the potential. Same thing here in Intel. Now, what that would require inside Intel would be tomorrow or some other day would be a gap down below the low of yesterday, which is 33.21. So we'll just keep an eye. But otherwise, a nice strong move, wide price spread, most certainly, and accelerated volume yesterday. So there's some good move behind Intel. Let's go to Victor in Paramus, New Jersey. Victor, how you doing this morning?
Yeah, just one quick thing. Yesterday was a Bradley turn date if it works out. And what about Twitter? You still think we're going downtown, or what? You got expirations tomorrow?
In the case of Twitter, let's go take a look at it on its daily chart out here. Now, what Twitter is doing is trading at 36.92. And what it's trying to do here this morning, Victor, is contend with its swing point here from July 10th. 26 million shares were traded at that session. Yesterday moved down 19 million shares. So volume kind of dissipating here. You really got to see what happens to Twitter at the low from July 10th, and that level is 36.11. And at this stage, it looks like at a minimum it's going to test it.
Yeah, remember you said 36.10 and it hit 36.11 that day? I talked to you like last Tuesday, and it hit 1 penny above your price target at 36.10. A bar, you told me from May 6th or something?
May 6th. Okay.
May 7th? You said it had to get into that bar, and it missed it by 1 penny. What did that mean? It rejected it?
You're talking about, well, at this stage, let's take a look at the information that we've got here at the moment. And at the moment, you've really got a couple of different potential downside patterns out here. But the one that we want to focus on right here is we really want to pay attention to this swing point from July 10th. And that low there of 36.11 is really the number to watch. Any close below 36.11 suggests a potential A to B equals CD to the downside. We'll take a look at what that price projection is for you. If it closes below that with more than 26 million shares, then that would be a little bit more bearish, because that would give you a confirmed A to B equals CD to the downside. And that smaller pattern there, Victor, if it closes below that level, that would say you're looking at probably 32.54, more likely 30.68. And what that really says is that you would likely see Twitter, your potential buy on Twitter would be down around the May 7th time frame, and that low is $29.51. So at this stage here, Twitter has backed off into its swing point. That's the swing point we're looking at from July the 10th, and it's doing it with a little bit lighter volume out there. So it's not really giving me an indication as to whether or not it's actually going to break downtown. I will tell you it's below market profile lows. It's got a bearish EMA crossover that I take a look at, so it doesn't really look that great. Now, you're looking to get in this on the long side. Is that correct?
Once the dust settles, what does it mean when the 50-day average keeps on going lower and lower? It's getting worse and worse?
Yeah, it's turning down. It is not what you want to see on a daily chart. Is the 50-day continuing to also turn lower? I'm just looking to see if I've got my daily chart out here that I can use. Let me put this up on the screen here. TWTR is the ticker symbol. And so what Victor is looking at, if you look at my screen right now, the 50-day is this thick blue line out here. Well, you can't really see it. It's turned to red. So to me, that's when it starts to decline. So, yeah, from that standpoint, it starts turning down. That's not a good thing. It's well below its 200-day moving. In fact, Twitter, just so you know, it had one of those death crosses, Victor, back on the trading session of that's where the 50-day passes down through the 200-day exponential moving average, and looks like that took place right here in the trading session of about April 15th. As the market was making a low, Twitter was actually giving you the most bearish of patterns when that 50-day crosses through the 200-day.
9 days. Is it running along the 9-day or no?
No, it's below that, too. It's below everything. There's nothing in a market that's up at its highs. Just kind of put it in a little bit of a perspective out here. With a market that's up at its highs, with with the Dow that's strong, with the NQ that's strong out here, you'd have to say, why isn't Twitter joining along in the gang out there? So really, it's if the market does turn to the downside, Twitter will take out those lows, and we'll get back to that.
We're going to S&P. We're going to the S&P 999, and you flip that over. It's S&P 666. Last time we hit 666 in S&P. This time we're going to hit 999.
Okay,
that's
all
my
right.
prediction.
All right.
They get $1 million on it. Everything's symbolic. The Illuminati controls it all.
Well, we'll note that, and then you give me a call if that's happening, so we can alert all of our TFNN listeners. All right, my friend?
Take care. Bye.
All right, thanks. That was Victor in Paramus, New Jersey. That was taking a look at Twitter out there. Not a good-looking stock chart. Let's go back and take a look at some of these other equity holdings with inside the NDX 100. We got to, what did I do out here? There we go. I got Apple, Intel, Facebook. Okay, let's go take a look at Facebook. Let's go see what Facebook is doing out here. It's trading out at about $67. It has a little new market profile that it formed here just a few trading sessions ago. It's trading below that resistance level, and its next level of support down around the 62.83. Let me pull this back just a bit. It has not broken a trend line, a recent trend line out here. If we take a look at the trend lines here, we'll come and use the April 28th swing point area, and then from a trend line standpoint, we'll use as our next touch point the level here from the actual bottom of the candle session from July 8th. So at this stage here, Facebook looks like it's just sort of consolidating. Let me see what else we have inside of Facebook. Anything else to really pay attention to? Still in a nice upward trend. Won't break that trend until it gets below $62.83 out there. Let's go see what else we have. So that was holding, and Facebook represents about 3.79% of the NDX 100. Let's take a look at Qualcomm. QCOM is the ticker symbol out here. So you can see the index very strong out here. We haven't seen much in the way of any patterns to the downside. And we've been through the top 5 or 6 holdings as we speak right now. If we take a look at Qualcomm, looks like this is really in a nice little sideways consolidation range as well. The bottom of the consolidation that I would be using is right around the level of $78. The top of the consolidation we can use 81. So you got about a 3-point consolidation. Qualcomm right now trading at 78.86 out here, moving in towards a swing point. That's the swing point right here from the trading session of June 25th. 10.7 million shares there. This morning down with 1 million shares in 28 minutes of trading. So it's moving into that level with some volume out there. If it breaks that area, well, you know what? It's got some pretty decent support there, because the real swing is, in essence, where that the top of the consolidation box, which is the April 24th level, that's got 22 million shares. So expect Qualcomm to find support anywhere between 76.77 and 78.62. Right now it's trading out at 78.88 out there. I have another question in the den. It says, if I have a moment, my thoughts on SHW. I believe that's Sherwin-Williams out there, SHW, but I could be wrong. Let's go take a look at what SHW is doing out there. And yes, it is Sherwin-Williams Company. Moving up this morning, gapping up this morning, trading out at 208.20, trying to take on a swing point that has some pretty good volume. So it had a high volume, high swing point. That takes us back, folks, to the trading session on March the 7th. That has 1.3 million shares out there. Now, the high of that, and this would be bullish if it can break above that, the high is 208.63. So far, the intra-session high was 209.58. So it's tested it. So far, it has rejected it. It's trading at 208.13. Again, the key number here to be watching is 208.63. Volume-wise, not too shabby this morning. 152,000 shares in the first 29 minutes of trading, or about 19 minutes of trading. What am I talking about? Key number today is going to be volume. 1.3 million shares. If it tests this, it's already tested it. It tested on light volume. It says it'll move sideways or pull back. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles, sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Kind of a flattish market as we speak right now. Dow's off 7 points, S&P down 3, NASDAQ composite off 3 points, Russell down 3, NDX 100 just slightly to the red out there. And with inside the top 20 holdings inside of the NDX 100, the one that is struggling the most here this morning is SanDisk out here. SanDisk is a gap down, has got some volume behind the move out here. Looks like they were out with numbers. Let me see if I can find their revenue numbers. It doesn't pop out at me right away. So let's just take a look at the stock chart. That's all that really matters anyways, right? If we take a look at SanDisk this morning here, already done 7.8 million shares to the downside. That's after a nice day yesterday. It did 8.2 million shares to the upside, but we've got volume off of the highs. We've only been trading for 25 minutes, and it's done 8 million shares. So what does that say? Now, here's where we were taking a look at Sherwin-Williams for one of our Tigers out there, and as we looked at Sherwin-Williams, it was approaching the swing points. It had a high volume, high swing point that it's testing this morning. Looks like it may have some decent volume behind the move. Won't know till the day plays out there. But certainly in the case of Sherwin-Williams, it has not doesn't have any signs of real markdown in the equity, no signs of real distribution inside the equity, and so pretty strong looking stock. My recommendation would be to look at at Sherwin-Williams as more of a buy on a pullback as opposed to a sell up at these highs. Now, a little different story here in SanDisk. And I'm not saying jump on the bandwagon right here, but here's now a real sign of weakness inside SanDisk with its target, its most recent sign of strength. That takes you back to the trading session of April 17th. So your risk-reward area is anywhere from that high of 84.11 on April 17th down to, I'd have to say, the low of the swing point, which is on April the 11th out there of about 73.11. That's the range at which SanDisk is targeting as we speak right now. It's trading at $95. So, you got to also get the market really working in the same direction. It makes it a little bit easier if you can get the market working in the same direction as the stocks that you are trading out here. But SanDisk should target its last sign of strength out here, and that was at April 17th time frame. We go check in on gold here for a moment. Let's go take a look and see what's going on inside of gold and silver. Gold's up $5 right now, trading out at $13.04. Still on its daily chart. No reversal signs whatsoever. Still trading below its market profile low, its support level, which now may become the resistance area, and that's at 13.11.10. I still am in the camp that gold wants lower price. I would not even be surprised to see gold take out its lows here from June the 3rd. And if it takes out those lows, if you take a look at it, does it with some volume out here, what you could be looking at inside of Goldilocks is actually a move down. I think it's in the 1100 area out here. That would take it to 1193.60 as one possible outcome. What gold has done here is it came off the C point of a potential A to B equals CD to the downside with what? With conviction, with wide-ranging bar, with volume inside of that move. Now, look, it's going against a nice breakout session from June the 19th. So until it cracks that low, which, by the way, is 1276, this is only a potential pattern that is out here. I'm just saying it wouldn't surprise me if in fact that happens. And if it does happen, everybody will be telling you that stay away from gold. Everybody that is, except for Stevie-san here. So, folks, it is Terrific Thursday. Thanks so much for joining us here at TFNN. If you're out to start your day, have a incredible day, an extraordinary day, and I look forward to seeing you tomorrow. Of course, you can stay tuned. The Money Master Show is up next, and I'll be with you for the next hour. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.